Hello everyone, welcome to the channel. My name is André Cardoso. As always, thank you very much for being here. If you are new in the channel, I hope you enjoy it. I hope you enjoy the content that I share here. I'm a global market analyst. I trade by myself, so I trade for a living. And I'm also a global market analyst on a community with professional traders where I share my charts and those patterns with that community. Some of you are already aware I work as a team member at Forex Analytix, which I also invite you to visit, as there we have a nice chat room for professional traders to get involved, and we have a nice platform which covers very different trading methodologies. We have macro technical approach, we have basic technical insights also, we have Elliott waves, we have harmonic trading or harmonic patterns, which is me, the person responsible to share that content there. But we have different people working together as a team to provide professional traders, and not only, of course, but most of them are people who trade for a living. So we are there also sharing our charts with them and our patterns in order for them to prepare their days and their weeks trading the market. So I invite you to join, to pay a visit to forexanalytics.com. From there you can subscribe and in fact you can pay $1 and test the service for 10 days. It's a useful useful tool for you to play with if you like to have a macro and a different approach of the market based on different trading methodologies. So basically we are 12 traders, different methodologies, all together sharing our charts in pro of our community, trying to make them or trying to prepare them for the markets for the days ahead. That's not my objective here on my YouTube page. Of course, I have also my own private Discord server where I share only and exclusively advanced pattern formations and well, some of those double tops, double bottoms, cup and handles, inverted heads and shoulders pattern formations, so those basic patterns. But mainly I'm there to share those advanced pattern formation, the so-called, or also called as harmonic patterns. Some of you are already familiar with those, with that methodology, with that trading methodology. And that's what I do here on my YouTube. I share some of those patterns with you in order for you to get familiar with those processes, and then of course if you enjoy that process, join me on and subscribe my service on Discord, which allows you to to repeat this process, trading these patterns over and over again for the next 100, 200, 300 trades. I've already, since I migrated from Telegram to Discord, I've already pushed more than 120 trades from October last year. So we have pushed a couple of trade suggestions there. So, and the idea is exactly that. I will identify a specific pattern, I share that pattern with my subscribers, and then of course you need to adjust your risk for that pattern, trade accordingly to the expectations we have after the formation of those patterns, and then let the market work for you or against you. Some of them will fail, some of them will work, very similar to any other trading methodology. Of course, the benefit of trading harmonic patterns is that they offer you an entry point, a very precise entry point, a very precise exit, also in terms of targets. But most important of all, it offers you the invalidation point. And the invalidation point is the most important level to pay attention to when you trade the markets, because it's the level that you think and that you assume the market will not go in your direction anymore. So at that point, the pattern is invalidated. We don't need to force to push just a few more minutes. If the price touches a specific price after forming a specific pattern, we know that pattern invalidates. So that, taking that into consideration, and assume the only number one rule: we never enter the market to lose more than what we expect to win on a specific trade. We are allowed to manage our risk conveniently based on those advanced pattern formations or harmonic patterns. So that being said, a part of this introduction, I welcome you to this journey. As I said, if you are learning process, even better. I believe it can bring value to that curve. If you are experienced already, I hope you take some useful information from my charts. Of course, this is only my own and private opinion that I share. I have all pleasure to share with you here on YouTube and also with my subscribers. So let's start with Microsoft. I don't want to take more time in this introduction. Microsoft weekly time frame chart, we have what I call, or what we may call, and that depends if the market will confirm or not, but we have what we may call a technical double bottom. We have a technical double bottom on a very specific price zone, or on a very specific element. We have the 200 weekly daily moving average, not the daily, I'm sorry, the weekly moving average, approaching from below and acting as an element of support. So as you can see, we have this moving average, the 200 moving average approaching at the lows, acting as element of support. I believe the technical double bottom may trigger, but of course that's not important what I think. It's important what the market will do. I can think the market will trade at higher prices. I'm not sure if the price will trade at higher prices. I can think the market will trade lower. I don't know if the market will trade lower. Even though technical double bottom, we need to wait for a clear violation of the fractal resistance printed at 263.92. Pay attention to a move towards the Fibonacci extension level 287.63. that represents a move above the fractal, similar to 8.79% above the fractal. So that's my expectation for Microsoft. We are, as you can see, we have a retest of the close prices of the first bottom. So unless the price, of course, starts to trade lower, I will pay attention to the potential breakout of this structure and fractal resistance printed above. That should trigger a move to the upside, which imply also the breakout above this channel resistance. So we have this descending channel. We have probably, let's confirm, but we may have some divergence here between these previous lows and the recent ones. So which means we have bullish divergence between the previous lows and the recent ones. Okay, that suggests a move, or at least a bounce to the upside. The market already produced that bounce, as you can see, after forming these lows in divergence with the previous ones. We have a new bounce, but then the retracement printed, or the pullback, or the new pullback printed this technical double bottom. So at this point I'm paying attention, as I said, with a violation of the resistance. I have other charts. I have the Western Digital, which has printed already the bullish pattern. I shared this pattern before with you, I believe on Twitter. That pattern points to the 38% fee. We have nice confluence with the golden Fibonacci extension and that Fibonacci retracement level at 48.30. So, but this is one of the patterns that we have no friendly risk reward at this point. So if you fail to enter the price at the completion point, of course you don't have the initial risk reward the pattern offers, which is the main objective when you trade those patterns, is to take advantage of the risk reward they offer. Very similar to Western Digital, we have Seagate Technology, which is trending higher above this trend line support. We have this previous ascending trend line, multiple threats of a breakout lower. We have a new support at 47.47, new lows. We are already trading above the previous resistance at 58.18. I also assume there will be a move towards the 74.32, towards 38% Fibonacci retracement level. This is the first target for that pattern, the default target for the pattern. We have also a second target projected above, as usual for all of those patterns. We have always a second target projected above or below. 90, 91, 61.8% Fibonacci retracement of all these swing low. So that's a second target which may help maximize profits, taking into consideration a pattern that offers you one of the best risk-reward opportunities to trade the financial markets. Weekly chart, Seagate. Let's go and jump into NVIDIA. NVIDIA, it's a very, very good chart pattern to try, at least in my opinion, to try the long side. We have a fractal resistance at 192.74. We are now threatening that fractal resistance, which means we are threatening the next zone of an inverted heads and shoulders formation, as we can see, also supported by the 200 weekly moving average. That being said, I also suggest that pattern suggests, not me, but the pattern suggests a move towards 266.37. That is equivalent to a move above the recent price, equivalent to a 38.4% at above the fractal, as I said. So if that happens, I will not be surprised to see one eventual cup being formed at some point, and we will track that possibility if the price starts to approach this price level. Of course, as I said multiple times, I don't know the outcome of those patterns. We have what we call a probability behind those pattern events. That being said, manage your risk conveniently and properly. Microsoft I show you already. Microsoft, Google. Let's go into Google. I shared this chart before on socials, also with a technical double bottom. This is Google with a technical double bottom, also above the 200 moving average. We have a fractal resistance at 102.25. Wait for a breakout of this fractal. That should trigger a move towards 114.11. This is the 200% Fibonacci extension level, and also the 38% Fibonacci retracement projected just a couple of points below at 111.41. So as we can see, we have nice boxes for Google, and I also admit we are breaking this channel, this descending channel resistance. So I admit that the clear breakout of this descending channel may trigger a move to the upside also on Google. So as you can see, there's a couple of equities that may suggest a move to the upside. That's not different for AMD, Advanced Micro Devices. Actually, one of the best computer processors in my opinion. I'm joking. But this is actually one of the I always use it, AMD processors on my computers for some reason, from my earlier stages. So that being said, AMD bullish alt-bat pattern completed at 60.83. We are also threatening the breakout of this descending channel, descending momentum, let's say. We are threatening the recovery of the 200 moving average. We have a fractal that we should pay attention to at 79.23. A move above this fractal, I believe it should be followed by a move towards the 38% fee, which is a default target for that bullish alt-bat pattern, the alternate bat pattern completed at an extension at the 113% Fibonacci extension. Note And of course, because I can be wrong, I can't get tired to say this, I can be wrong, I have been wrong multiple times, I just don't like to stay wrong. As soon as I identify the invalidation of a pattern, I jump out immediately. Another thing that can happen, if the price fails to find support at this price zone, and if it fails to achieve these target zones or the default targets for that pattern, we may see more bearish momentum, of course, if the price breaks a support. And if that happens, I will point to the golden Fibonacci projected at 1587. Of course, we are far away from those price zones, but take that in mind. If the price fails to find support at this price zone, of course, we may see more bearish momentum for AMD. But at this point, we are paying attention to potential moves to the upside, continuation or giving sequence to this bullish alt-bat pattern, which points, as I said, to 96.79, the 38% Fibonacci retracement level. Now, I shared also before this one and the potential breakout for Adobe of this descending channel. So let me remove this line for now. So we have this descending trend line, let's call it a trend line resistance. We saw kind of a very shy breakout of this structure, so it doesn't show much confidence. Usually I like to see a very strong move, very confident move to a breakout, to see a breakout. You know, I like to see strong moves, even though it may work, and when I see these breakouts of after a move to the downside, it's actually, let me track this one. This was a 60% fall from the previous historical highs on Adobe. So basically, this is a very significant pullback or correction. So I will not be surprised to see an attempt to recover after a sharp drop. That being said, what is calling my attention is not in particular the breakout of this structure, because the market can fail and start to trade even lower. So this structure may, let's say, the breakout of this trend line may trigger a lot of traders to push their trades to the upside. I'm not saying that will not that doesn't make sense. So there's a breakout of the structure. The most bearish momentum is trying to break that data. So I admit that possibility, but that's not the most important thing that I'm pointing in this chart, or at least that I'm paying attention to. In fact, I'm paying attention to the potential breakout above this fractal resistance, because the breakout above will confirm the false breakout above support. As I said multiple times, we have a false breakout which will be confirmed after a breakout above this fractal. So we have this fractal exactly at 451.15, and I admit that the breakout of this fractal will force a move to the upside towards, again, the Fibonacci, the golden Fibonacci extension level. So I have that Fibonacci projected at exactly 560.83. Basically, it's equivalent to a retracement or to a move to the 61.8% Fibonacci retracement level. Okay, equivalent move towards that Fibonacci extension level. So, and that of course will complete later the shark pattern. Some of you are familiar with that pattern, some may not, but if you are not familiar, if you subscribe the channel, you will become familiar with those patterns for sure in a short period of time, because that's what I do, and I share those patterns every single day. So pay attention to moves also to the upside on Adobe, and the eventual recovery of the 200 moving average approaching from above, which points now to 422.09. So pay attention to that, at least to a retest of this or a visit to that moving average, and then eventually a breakout above this fractal, which may force a move to the upside. Note that we also have nice bullish signal, not only on MACD, but also RSI showing that bullish divergence signal. And I will finish with Activision. The reason why I'm showing you this chart, it's because I shared, well, because we have a golden Fibonacci level projected at 6809 that I think it may offer nice support for the Activision. Of course, are you sure about what you're saying? I'm not sure about what I'm saying. I'm not saying there's a 100% probability for the price to find support at these levels. What I'm saying is that there's a golden Fibonacci extension at 6109 that may offer support for the pattern. The reason why I'm saying this is because we have this gap that needs to be filled, which will converge with this golden Fibonacci projected right there, the previous highs and fractal resistance right there that gives sequence to this gap, as you can see. Okay, you have that gap to be filled, so I need to see Activision filling that gap, which may help, which will put for sure the price at the golden Fibonacci level. I will try a new long position if the price offers me that opportunity. I will target the previous structure high. This will be my first target zone. This will be, of course, my second target zone, the previous highs, but I will talk about that later. And based on this expected reaction, I can start to calculate my eventual reward, of course, but also, and most important, my invalidation point, where I don't want to keep holding this long position if I go long from the golden fib, where my stops will be positioned. Let's do the same exercise over and over again. If I target a move that offers me 27% as a potential reward, I cannot put my stops at 30%. As I said multiple times, the maximum that I'm allowed to use, it's a 27.59% reward risk. And that makes no sense because, as I said multiple times also, if you repeat this process over and over again, you will become a break-even trader or even a losing trader. That will depend the risk, that will depend your winning ratio. If you have a higher or a very strong winning ratio, probably we may be able to survive, even though it will be very difficult. If you have a normal, let's say what I consider a normal winning ratio, like 50%, 45, 50%, 55, 60% winning ratio, probably if you play a one-to-one risk reward, you will not be as profitable as you should if you play on a friendly risk reward approach. So that being said, 27-30% as reward, I can try to apply kind of a 50% risk for that trade. I admit that if the price approaches these lows, it will be forced to trade even lower, probably. So that means that I can try to place my stops with a 1-2 risk reward approach. Note that we are on a weekly time frame chart. We can always try to go into a lower time frame and try to maximize, or try at least to minimize our losses and try to prevent and try to protect our position, taking into consideration a pattern that may emerge as soon as we touch this price zone. Wait for the price to come to this price zone, go into a lower time frame, identify the pattern the market is forming, a lower time frame, flag pattern, triangle, whatever, channel, whatever the market starts to form, and we can also always try to apply a risk accordingly, or let's say supported by that lower time frame event if you wish. Okay, so but as you can imagine, this is a weekly time frame. I'm not so sure if you have stomach to play the market with a 50% risk in your trades for a trade that may offer you a 30% reward. I'm not sure if that makes sense for you or not. So, but think about that process of going into a lower time frame as soon the price touches the 6809 and try to identify a lower time frame event to try to minimize, at least to try to minimize your losses, and saying, okay, if the price fails to bounce from that smaller and lower time frame pattern, so I will try the next event because there's a probability for the price to trade even lower. So go into a lower time frame when the price approaches the golden fib and try to identify the best pattern on a lower time frame to try to take advantage of this move. I believe Activision it's a bullish stock for me. All-time highs at 104.61. I admit the price will keep trading even higher, so I can be wrong. As I said before, I can be wrong. I just don't want to remain long. And there's a simple exercise that you can, or a simple element that you can use in your trade in this situation, which is this trend line support. If the price breaks below, that should trigger a move to the downside. So you don't need to use a huge risk for that pattern. If you want to trade this pattern from the golden Fibonacci, you just need to assume that if the market breaks lower, the probability for a move to the downside will increase. So you don't need to use a huge risk to trade this specific pattern. Even on a weekly time frame, I believe you can try to find the best way to take advantage of with this pattern, almost for sure. So that finishes my introduction for today. If you have any doubts, any questions that you like to get clarification, or if you have anything to discuss with me, if you want to discuss some charts, please do that. You can find me on Twitter. You can find me on, of course, with my email. You can find me on my webpage with the link. We have the links below in the description, so you can join me on Discord if you wish. You have there a free chat room. Of course, my Discord, as I said before, it's for my subscribers, which allows them to be notified once I post some pattern there. Well, for them to think and for them to dissecate if it worth their money to try to get involved with that pattern. So, but that is my main objective, is to share with my subscribers on Discord some of these patterns and some of these trade setups, and try to help them embrace this harmonic pattern process and learning these trading methodologies. So I hope you enjoyed this video. As I said at the beginning, if you enjoyed the video, please press that like button. It's always important for me to get that feedback. It fills me with motivation to post another one. You know, it's always nice to get your feedback. And that being said, I wish you all the best for the days ahead, and for sure I will be here next days sharing more content with you. For today, just a couple of stocks for you to think about it, and that's all for today. Have a nice day and see you tomorrow.